Carol Foddick from the Carol Foddick Real Estate Group here at Keller Williams. It is March 2024, and I'm here to give you an update on what's happening in the Greater Toronto Area real estate market this month. If you've been watching my last few monthly market update videos, you'd know that I've been suggesting that we are in the early stages of a real estate surge since the beginning of the year. Why is that? Well, you've heard me unpack at length the major economic factors that underpin the Greater Toronto Area real estate market. Things like undersupply, unprecedented immigration, geographic and political constraints that prohibit us from being able to grow the number of housing units that can be built, and the fact that we're entering into the household formation years for a huge cohort of the Canadian population. Sometimes I feel like a broken record talking about all the reasons that the GTA housing market is likely on the verge of a boom again, unlike anything we've probably ever seen before, which is a really big statement given what we've experienced already over the last couple of decades. The rise of interest rates, questions about the overall economy certainly have given people reason to pause their plans on lots of fronts, including real estate in the last 20 months or so. But it looks like a combination of a change of messaging from the Bank of Canada about the expectation that interest rates are going to come down by the midpoint of the year, together with favorable news regarding the war and inflation, it sort of caused the dam to start to leak over the last 60 days or so. And I think that there is this huge wave of pent-up demand that is about to come crashing down on us. And so if you are a real estate data nerd like I am, you spend your days watching and interpreting the huge amounts of information that come out of reliable sources that we as licensed brokers have access to, and really not paying a lot of attention to the news stories written by people that are just offering an opinion. Because when you run one of the biggest real estate teams in the country, it's important that you're able to articulate real fact-based data if you're going to ask your clients to rely on that information to make a decision about what, most people will be the largest asset that they own. So let's unpack some real data here together today. Firstly, I want to talk about prices. We saw an increase in the average sale price for the GTA move from $1,030,000 in January to $1.1 million in February. Substantial. Secondly, we saw the raw number of sale transactions in December. The Toronto Real Estate Board reported that just about 3,400 sales happened. In January, it jumped to 4,200, and in February, it jumped again. There was over 5,600. Still well off the mark of the 8,000 or so that we see on average in a normal market month, but this number is climbing fast. It's going to be really interesting to see March numbers, which will come out in a few weeks, because we are seeing a large number of multiple offer or bidding wars scenarios on listings all over the place. And we know that our mortgage partners right now are being flooded with applications for pre-approvals. The third point I really wanted to make was that days on the market has also been decreasing. Days on the market tell us how long it's taking for a home to sell once they're listed. It dropped from 37 days in January to 25 days in February. So a strong indicator. Finally, I would say the fourth indicator that I'm sort of looking at is number of listings. So in October, there were over 19,500 listings on the market and only about 4,600 sales. In February, by comparison, there were about 11,000 listings on the market and 5,600 sales. That means more buyers on fewer listings. Very important. So if we have higher sale prices, a greater number of sales, lower days on the market, and more bidding wars, what does that tell us? It tells us that this statement that I'm going to make is not an opinion, this is fact. The market is shifting back to seller's market territory. So what does this mean for you? Well, if you're thinking of buying, it might be time to get off the fence. If you're an upsize buyer, yes, the value of your current home is going to go up. But, super important, so too is the value of the more expensive home that you're thinking about. So if the market grows, you have to remember that so too does the gap between your sell and your buy. I want to give you some rough numbers on this to illustrate. If you own a $1 million home, which is the average for a GTA home right now, and you want to sell it and buy something larger, maybe a $1.5 million home, let's look at what happens if we get 5% growth in the market this year. Your current home, which was a $1 million home, is going to be worth $1,050,000, but your $1.5 million purchase price went up in value by about $75,000. So it's actually costing you more to wait. You'd either have to come up with the extra $25,000 in cash or add an extra $25K to your mortgage. Food for thought. If you've been waiting for the market to come up to a specific value on your home, that's great, but remember, all boats rise with the tide. And so it's probably time for you and I to have a conversation about real numbers on your move. Okay, so what if you're a first-time buyer? I get this one a lot. I'm going to wait and save more so I can afford more. But my question to you would be, can you outsave the market? If you couldn't qualify to buy, say, a $600,000 home, and again, the market grows at that same 5% target, it means that you'd have to save at least another $30,000 just to keep up with the growth of the market. And because the $600,000 home that you can afford now is going to go up in cost to $630,000 next year. And so instead of benefiting from the growth of the asset, you are now victim to it. Plus, you probably had to pay rent somewhere for a year, so you've paid someone else's mortgage off instead of your own. But take a moment and flip it around. If you purchase a home you can afford now and you have that $30,000 asset on your side of the balance sheet, along with the thousands of dollars of equity you've paid off on your mortgage during that year, this is obviously a far better scenario for you. And it supercharges your ability to be able to turn yourself into that upside buyer that I just mentioned a few minutes ago. So, as the old adage says, don't wait to buy real estate. You buy real estate and wait. On March 27th, my real estate group and I are going to be hosting our incredibly popular first-time buyers webinar. This is an important one, guys, and one that hopefully you'll be able to share with someone that needs this information. We're going to be talking about how to start on the path to home ownership here in Ontario. Maybe it's a friend that you know that is paying crazy money for rent. Maybe it's your adult child and you need to get them out of your house. Maybe it's you and no one ever sat down with you and walked you through the steps to becoming a homeowner. We're going to talk about incentive programs, rebates, the mortgage process, everything you need to know to start your journey. I do believe that it is a fundamental human right that every person should be able to own the roof that they live under. And every year as a real estate group, we are so honored to be able to help, many, many first-time buyers make the move into home ownership. What if this time next year you're watching this video from the living room of a home that you own instead of rent? We want to help you get there. The link to register is below, and just for fun, we're going to be giving away a $100 gift card from anyone that attends. I hope you can make it. I'd love to share my knowledge with this on you. Now, finally, I've referenced 5% several times, and in case you're curious why I picked that number, it's because it's an exceptionally conservative real estate number that I use as a real estate investor, and it is the 50-year average of annual growth for the Toronto real estate market. Some years more, some years it's a little bit less, but this is the average. I think collectively it's time for us to turn down the volume on the opinion pieces written as clickbait for the 24-hour news cycle that is just created to try to keep you anxious and watching. If you owned a home in February 2020, which hard to believe, that was close to 5 years ago now, in the GTA, the growth and the value of that asset has been over 20%. That's a real number, even with all of the volatility that we've just experienced. You started here and you ended up here. And along the way, you built up tens of thousands or even hundreds of thousands of dollars in your equity by making mortgage payments. So if you're a homeowner and you take nothing else away from this video, I hope that it's a feel-good reminder that real estate, if purchased with common sense and managed with reasonable care, is about the safest investment that you can make in the world. But I can't take credit for that quote. That's our friend FDR. I know that this video has been a little bit longer than usual. I appreciate you sticking with me. In June, I'm going to be celebrating my 21st year in this industry. And as you can see, I take it really seriously and I'm really passionate about it. It is such an honor for my team and I to be able to serve you and the people that you know in everything to do with real estate. So if you have questions about anything or there's anything that we can do to help, please just reach out. Thanks again for watching, everybody. This has been Carol Foddick from the Carol Foddick Real Estate Group, and I am looking forward to catching up with you again next month.